Welcome to the FarrCast, kicking off our 7th season of giving you insight into Wall Street, Washington, and the world. And now here's your host, Michael Farr.
Welcome to the FarrCast. I am Michael Farr. Thanks so much for joining us again this week. It is the 9th day of November. We heard from the Fed last week. We've had some elections in the country, around the country. We've had a presidential debate last night. And I think much more important than all of that, we've had a lot of earnings news. And the earnings news was more or less pretty good earnings news. Corporate America's fighting the slings and arrows of outrageous fortune, but they're also fighting the slings and arrows of inflation. And the numbers aren't awful. They continue to expand. So we're still in the middle of an economic expansion that is not really being felt by the consumer. And the consumer's bitching about that. And they're bitching to their politicians, and their politicians are hearing that they're unhappy with the economy, even though the economists are telling them the economy's good. The economy's good. The economy's expanding. It's still too good, and we're still hoping it continues to slow down. That's something very counterintuitive for the average American. They don't like inflation, but they don't want to slow down, and it's a very tough thing to manage. Most are figuring that the Fed is done. Fed is done. No more rate hikes. We're going to find out if our guests this morning agree with that, the political situation, what's going on with Israel, Russia, China, everywhere else. And as if there weren't enough fighting around the world, don't forget Capitol Hill and the big date. I was told by our great friend in the UK, who's a FarrCast fan, listener, a money manager, Sir Nicholas Chappell. He's not really a sir, but I call him that anyway. Sir Nicholas Chappell said, when you told me I was harping on November 17th a couple of weeks ago as the date for the shutdown in government, or at least that they had to have a continuing resolution. Don't think, folks, that the Republicans can't screw this up. 3, 2, 1. Again. So, you want to invest for the next month and a half, 2 months? It's usually good months for the year. How about for the next 6 months or 6 years? We're going to get some advice. Jim Iuorio, Dan Mahaffee, Stephanie Link are our guests today. Jim Iuorio, TJM Institutional Services, the voice and face of the Chicago Exchange. Welcome back, Jim.
Thank you. And Michael, you as an orator have really come around. Fighting the slings and arrows, that was beautiful stuff.
Did you like that?
It was inspiring. Yeah, I thought it was great. So nice job.
You know where it's from? The slings and arrows from Shakespeare, from Hamlet's speech, to be or not to be. See, I'm an old English teacher. I pull this stuff out of the oddest moments, I know. All right.
Fantastic.
Thank you, brother. Thank you. Appreciate that. What are you thinking?
So, okay, so you mentioned a couple different time frames. You said the next 2 months, the next 6 months, the next 6 years. And something that's interesting is that we have to acknowledge that everything changed that Halloween week when the ISM number came out crummy, the ADP employment number, and realistically the non-farm payroll number came out crappy. Now, if you looked at those just on their own, it'd be mildly bad, and it would signal that the Fed should, keep a sharp lookout. But when you couple them with the data that came out the previous month, that was highly suspicious is the wrong word. I think the way they calculate the data is poor. Those NFP numbers from not last release, but the one before that showed like 300,000 jobs, that was a bad number. They were government jobs. They were part-time jobs. So anyway, is the Fed done, as you asked? Yes, I think the Fed is done raising rates, but that doesn't mean rates aren't still going up. And I'm not talking about the nominal rate. There's a weird aberration that happened in this particular rate cycle in that the 5 years prior to the first hike, 10-year yields averaged 1.96%, historic low, meaning that everyone had a chance to roll their loans into duration, into longer term loans. So now we can say the mortgage rates right now are 7.5%. No, they're not. The real mortgage rates that people are paying because they hold on to their 2.5% mortgage rates like grim death is probably around 3. So as each month passes, as each 6 month passes, people are going to have to roll out and refinance debt just because life happens. So the rates will still keep going higher. But does that make sense, by the way? Am I putting you asleep?
I mean that people are still paying the old rate and they're not paying the new rate and they're not feeling the squeeze of those higher payments yet. But eventually, as time rolls off and things expire and mature and people have to move for jobs and other things and people die and houses have to be sold, mortgages have to be got, and those newer expenses will be taken on as part of shelter costs.
Right, and now then extend that to
Hey, I
businesses
did that really well.
You did it better than I
mean,
did.
that was off the top of my head. That was okay. Okay, sorry.
That was really good. You are hot today. The right amount of coffee, people.
So now slings and arrows and shelter costs. Good. Okay.
Exactly. Okay, so the stocks had this V-shaped bounce as soon as they realized that perhaps the Fed was done. Fine. I think important there too was that Janet Yellen kind of caused a short squeeze in the long end of the curve by not auctioning as many bonds and caused those rates to go down. So stocks are happy. That's fine. I don't believe in the short-term stock market rally until the S&Ps can settle above 4450. We're getting within spitting distance of that, and I think it's important. Then you mentioned the next 6 years. I still have a difficult time thinking that stocks are going to wildly outperform a situation where there's so much competition for money, meaning 5% two-year yields, which I think is one of the key pillars of where I would be right now. And I'm not saying get out of stocks. I don't like stocks for the next 6 years as much as I like some other things.
Well, you've said that we've had this V-shaped bottom. We're up. We've broken through the resistance. We're trading in high territory. And if I think the rule is you sell high, though people don't like to. And the damn thing's high. And a lot of most of the money you and I have made in investments has always been what we paid for the investments and the discipline that we employ before we make a buy, before we commit our cash. I commit my cash for a longer period of time than Jim commits his cash, often, not always, but often. But we have our rules, folks. But common to all of those rules is I've got a definition of low and Jim has a definition of low. And as professionals, 30 some odd years into this, we don't buy high. We don't chase them. You can tell us every good story you want to tell us. And the one thing Iuorio and I will do is walk away from those stories. You said settle in above 45.50. Is that what you said?
44.50.
44.50. Yeah. Settle in above 44.50. What do you mean settle in? So that implies to me if it goes up and touches something 44.54 and then comes back down, that's not a settling in.
No, we need the day to end at that price or the week to end at that price. And each one is an incrementally stronger signal from technical analysis. And a lot of times people on the outside, the investment world thinks that technical analysis is some sort of voodoo lines on a chart, and it's not. What it really is that taking the temperature of the investor class, the trader class, like it's a momentum indicator. So if it can settle above there and not, just going up there for a cup of coffee, to me, that means the algos could have driven it up there and then it fails. But if it settles the day above it, the closing price is above 44.50, or it settles the week above it, each one of those are strong signals to me. I'm looking for the daily close above it, and then I'll start playing more for the long side. In fact, to retrace what I just said about me thinking stocks aren't that good for the next 6 months, that just means in my long-term portfolio, if I had it like set up 60-40, I'm changing it to 50-50. And now that you can get a rate, and I never really had it set up 60-40. I'm just giving an example. I had other more exotic things to get into, but I'm just changing my allocation a little bit lower. And the medium-term portfolio is, a tick and a half, a 1.5% loss. I add a little, 1.5% gain. I sell a little, and I'm just trying to play more of a range type trade in my medium-term portfolio. Does any of that make sense?
Well, it makes sense if you're a trader. I don't think it makes sense for Fred and Ethel,
right,
and I don't think they should be doing it or thinking about it. Fred and Ethel need to be thinking more like me. But let me tell you something, Fred and Ethel. I'm jealous of Iuorio for so many different things. He has his own restaurant where he can go eat hamburgers for free, for God's sakes. I mean, it just goes on. It just goes on and on. And now he's taken, not only is the guy a fitness freak, he's doing this ice bath thing in the morning. And he says he makes him feel great. I would have a heart attack, ladies and gentlemen, if you put me in an ice bath. And I don't mean at 6 o'clock in the morning. I mean at 6 o'clock at night or 12 noon. I don't care. You put me in a bathtub full of ice. God almighty. But Iuorio, as a technician, when you ask him about markets, will always say, I like it here or I don't like it here, but if it breaks above I'm going to do this. And if it breaks below, I'm going to do that. And so he has those rules conscribing what he should do next, whereas I don't. I have to say, I'm looking for something that's really inexpensive with strong fundamentals. I want to find some kind of company that for whatever reasons has gotten hurt or is somewhat new and is expanding in an area, an industry that's expanding and that's growing share within that industry and has a solid balance sheet. And why do I care about a solid balance sheet? Because I'm going to hold the thing for a few years and crap happens out there and lawsuits happen and talcum powder happens. Who in the hell could see talcum powder coming? Everybody, every kid for 100 years used talcum powder. And now it's a problem all of a sudden for Johnson & Johnson. And it's a big problem for Johnson & Johnson. They're going to get around it. But these things happen, and you better have a solid balance sheet if you want to hold Johnson & Johnson. Iuorio would see that stock go through its support line and say, I'm out, or at least I'm going to trim. And if it goes through another one, he's going to trim again. So a little bit of a different approach, but I'm always jealous of that. But if you don't think his approach takes as much guts and courage as our approach, and my guts comes when I have to sit there and look at a stock that's down and down 20% and say, no, I don't think I'm going to buy more right now. I'm going to wait for 25% or 30%. If that happens, I'm still seeing a negative trend and I'm going to be patient, and I've got capital gains and I'm not going to take the capital gains, and I don't want to take the loss because I still believe in the soundness of the company. That's really hard, because that's when I have clients calling me, go, what in the hell is wrong with you, Farr? Sell it. Well, that means I'm a trader all of a sudden, and I'm not the same investor, and I will add to it, and I don't always get it right. I really don't. Neither does Jim always get it right, but it's my rules and his rules that we've developed over decades that keep us safe and on a generally positive course with returns we and our clients can live with pretty well over time. So, Jim, the political situation, we saw debates, we saw those elections. How do politics, and we got to go, how do politics affect the stock market? Do they, don't they? What do you make of all of the political noise?
Okay, so this is my observation. People are going to say I'm some sort of political hack. When Democrats are in office, oftentimes they increase regulation, and that requires the Federal Reserve to keep rates inorganically low. So the stock market tends to do fine when Democrats are in office. And when Republicans are in office, they tend to lower regulations, helping businesses actually make money. But then the Fed can let rates seep a little bit higher. But the stock market generally does well there too. So either one can be good for the markets. But I do not like the Democrats' approach over the last few decades of increasing regulation to make it tougher for because I believe that's a bubble bust cycle waiting to happen as the Fed has to. And by the way, the Fed has said this in the past, that they've had to keep rates low to make up for poor fiscal planning. And so I don't think I'm alone in that.
Okay. So when you look at the election stuff, is there anything short term that makes you change anything? I mean, do you get scared about the 2024 election or anything? I mean, you're going to invest all the way through it, no matter who gets elected, right?
Yeah, I'm not scared yet. I don't think there's a great candidate emerging from the right yet, and I certainly don't think there's a great candidate emerging from the left. So all I'm doing is back and forth, is just watching, sitting back.
I have not talked to one person in the country, not one person, for all of the travel, for all of the everything. Actually, I've never talked to a person out of the country. I've been out of the country a lot this year. Recently, the past month, I've been out a month of the past 2 months.
Wow.
Out of the country. And I haven't heard one person say, wow, Joe Biden, Donald Trump match up. You can't go wrong with those two. Find me one person to say that. Find me one person in the country to say that. And if you can't, what the hell are we doing? Jim, I got to go. You're the best. Thanks for being with us. Ladies and gentlemen, we're coming back with Mahaffee and then Stephanie Link. Please stay with us.
Thank you for joining us this week on the FarrCast. Now it's time for political analyst Dan Mahaffee and your host, Michael Farr.
Welcome back. A terrific segment there with Jim Iuorio, and very interesting to think about the different types of investment disciplines. Now let's move to a world where there's seemingly very little discipline, and I wish there were a bit more. I wish there were any. Dan Mahaffee, who is a very disciplined guy, by the way, is the director of policy for the Center for the Study of the Presidency and Congress, a Washington, D.C. think tank, and now in season 7, the senior political analyst on the FarrCast. Welcome back, Dan.
Thank you, Michael. Good morning.
Good morning. Dan, let's start domestically. And as battles go, I was talking about the various battle fronts and fighting fronts around the world. Let's start with Capitol Hill. Mike Johnson has a November 17th deadline coming up to keep the government funded, and it doesn't look like he's making progress. What's going on in Capitol Hill? Will he get this done? And, you know, I said in the first segment, everybody says, oh, yes, they won't do it. Don't they? They won't do it. They know. Don't think they know, and don't think that that's mattered in the past. And the Republicans can absolutely screw this up again as they continue to prove. The one thing they continue to show they're really good at is screwing stuff up.
Yeah, Michael, I think, look, you have to say that Mike Johnson, Speaker Johnson, this is the weekend that could very well decide his speakership, and he has to basically decide how he wants to lead. And the problem he's facing ultimately, and no matter which way you want to slice it, is that he can't get the far right of his party to agree with a budget plan that is passable in the Senate and palatable to the rank and file of a lot of the other Republicans as well. And that's the issue he's facing. And it's a question of now how he decides he wants to lead and whether he's going to be speaker or whether he's going to be spokesman for the Freedom Caucus. And I think that's a big question coming up for him on how he wants to handle this, because look, he on the Israel stuff, we've seen the you know, how do we do this as part of a deal? All that's though on pause right now. Let's not forget that, because we're coming up to this deadline, and it's a question in the coming week of, does he go with this approach of, they're calling it laddered, although I see it, there's two parts of it, so maybe it's just a step stool, not a ladder. But it's a approach for multiple CRs to bridge different points. And ultimately, I think the biggest question, though, becomes at what point does the Senate force the House to do something? And I think you see the Senate starting to move in that direction, trying to put a package together, you know, December timeframe deadline again. Ultimately, all we're going to do is just kick this can down the road, be it December, January, or April. But in the end,
I'm interested that you've said Speaker of the House or spokesman for the Freedom Caucus. It strikes me that neither gets a CR passed on November 17th.
Well, he does, but it's the question of it. Does he do it with how many Democratic votes again? And does that trigger this whole? Is it Groundhog's a day again, or does he still have the same 3 strikes that McCarthy had, and he can use a couple to get through this crisis?
What's your guess?
I think he has the ability to use a strike, as it were, to get through the crisis. I think, though, you might need to see something more like a symbolic weekend shutdown. We need to perhaps even have a little bit of a disruption just to let some of them claim that they got their shutdown or did this. But look, some of the ones, Chip Roy in the House Freedom Caucus, he says, look, we'll do a CR, but we're going to attach the Republican immigration bill to it. That's a non-starter. But that's that same logic of attach the IRS agents refunding to the Israel package. It's okay. That's dead on arrival in the Senate.
Yeah. You know, the new gun control law, apparently they're sending handguns to all Republican members of Congress with the instructions, point at foot and pull trigger. I mean, these guys keep doing it. I mean, you can look at the recent elections. You can look at what we've got going on Capitol Hill right now. How do the Republicans find some sort of their respectability back in the eyes of the voter? And if they go down this road, and if they go to CR after CR and they continue this fighting and they can't get their act together, why don't you expect
because
that
it
you're
does
going to see Virginia again, where everybody goes, I'm sick of the Republicans, I'm voting for the Democrats, and I don't care who they are.
Because they're already respectable in the mind of a voter who doesn't think like us.
And those people, in the minds of the voters who they don't care about, those are
they're the mind of the voter who wants to shut it all down. They're fine with axing 40% of the federal government. Vivek Ramaswamy was right last night. Yeah. Defund the FBI, lock up all the people who investigated Trump, shut this down, shut that down. They're being seen as heroes for standing up to a Washington establishment, and frankly, don't really care if the government shuts down, because they'll fundraise on how they stood up for their voters against the swamp.
And and then what? The question is, you want to shut it down, you want to stomp your foot, you want to make your point, you want to storm out of the room, and yet you've still got a restaurant to run. You've just stormed out the front door. There are people sitting at every table. You got people in the kitchen who are going, what are we supposed to do now, boss? And there's no boss.
Well, their end plan is a country of farmers, pastors, and housewives, but you might have
guns
to cut
and butter.
that.
Here we go, guns and butter. So, Dan, is there any resolution to this? But you think he's actually going to get something done?
I think he gets something done, and government stays open. But I still think it comes down to he's going to need some Democratic votes on it, and I think he gets a pass to get it through this crisis. But again, once he's done that, the far right is still going to want something just after that. And I don't know, what can he do on impeachment? What can he do on Biden investigations? Other things to throw red meat at them. But that's all the playbook McCarthy tried and didn't work.
You think he's going to get a CR some way here on the 17th?
I think he gets it some way. I don't guarantee that it's by the 17th. I could say 19th or 20th too.
Will he keep his speakership?
I think he does, because the only deterrent factor to that is I think these Republicans don't want to go through that again.
Yeah, watch him, Dan. Watch him. I'm gonna hold my judgment here.
Again, as I said, it's an entire incentive structure that works unlike we think.
I disagree. I disagree with Mahaffee very reluctantly, but boy, I think these people have been most talented at disappointing and doing exactly the most stupid thing you can imagine, and they've been very consistent. So I'll go with the consistency here. All right, Dan, we watched the election last night. I read Greg Valliere this morning, and he made his comments, as did everybody else, about how Nikki Haley did and how Ramaswamy appealed to that perhaps Trump voter, how DeSantis acquitted himself better, but was still stiff as a board, and the other people just don't really matter. So, and then he concluded with, and it was really nice theater, and it was nice to see a debate, and it really wasn't a bad debate, and Donald Trump's still the nominee, and you're going to have Trump Biden, and it looks like Biden loses right now. You disagree with any of that?
I don't disagree with any of that when you look at the analysis of where we're at now. You have to, of course, base this on what we're seeing now, and there's no clear alternative to Trump or Biden right now. Nikki Haley, on the other hand, though, at least reminded us of what a Republican Party once sounded like, particularly on geopolitical issues and what we face, the dangers around the world, and how the United States needs to continue to lead. But you cannot dispute that there is also an undercurrent of a isolationist, nihilistic, cut America off from the worldview, America first, that is was represented on stage by Vivek, but is also part of the MAGA core of the Republican Party in many ways. So look, I think, Haley may have won the night, but if she lost, it's because Trump world may soon be turning their fire on her rather than the governor of Florida.
Is there anything that happens that gets Joe Biden, other than illness, off that ticket to step down or to change his vice presidential candidate? And is there anything that happens legally or elsewhere, other than the same sorts of parameters, illness or other catastrophe, to Donald Trump that gets him off of that ticket?
Look, I don't think at this point a conviction gets him off the Republican ticket, but it almost guarantees a Democratic win. I think the only thing that gets Biden off the Democratic ticket is someone other than Trump being on the Republican ticket.
Don't forget, folks, Christine Blasey Ford. Christine Blasey Ford was, I as a somewhat of an insider, I know where her intentions originally were, and she was manipulated very much by a democratic system, and she complied, so she's not off the hook here. But she was pushed very hard with this notion that she could stop a Supreme Court nomination, that she could change the history of the United States, that she could keep Brett Kavanaugh and a conservative court from happening. In that Christine Blasey Ford was manipulated that she could change the world, don't you think there could be some judge, clearly a Democratic elected Democrat judge, or one of those political leanings, who could think that he or she could change the world by coming forward with that conviction, no matter what, Dan?
Well, look, I think the question will become, all the ones that are convictions, as far as I know, would come down to their jury. And that's, I think, the big wild card in these federal cases, is that, does it come down to one juror standing there saying they want to stop a conviction of Trump? So the legal system, as you point out, has a lot of different wild cards. I think what we've seen, though, in this New York case, where the judge has actually tried to avoid being baited by Trump into a overreaction or over provocation, but Trump is also playing chicken with a lot of these gag orders and potential contempt of court charges with his behavior.
Yep. Okay. Dan, I'm out of time. Any reason to expect we're going to have any kind of pause in the Hamas Israeli war right now? And I mean, I got 10 seconds. So
no, I don't see anything, as the Israelis now are really putting pressure on there, getting into the tunnel complex. It's a tragic situation on the ground, but the Israelis believe they're in a war for their survival.
Thousands and tens of thousands of lives are going to be lost here, and it is a tragedy, and war is a tragedy. But the reality here is there's no indication that Israel is going to back off for a second, despite the political rhetoric. All right. We keep all sides and all conflicts, including Ukraine and elsewhere, in our prayers. Syria, God, that was awful. So please, awful inhumanity against our fellow humans continues around the world. Baffles me, absolutely baffles me, and embarrasses me. Dan Mahaffee directs the policy at the Washington think tank, the Center for the Study of the Presidency and Congress, where the founder, David Abshire, my great friend, Ambassador David Abshire, called for civility in politics. Please, Dan, keep pushing Ambassador Abshire's point and agenda of civility. The world will be a better place. We're going to be right back with my great friend and colleague, Stephanie Link. Please stay with us.
Michael Farr and the FarrCast are proud to support Heroes, Inc. Heroes supports the spouses and children of law enforcement officers and firefighters who gave their lives in the line of duty to the greater Washington, D.C. community. Their singular goal is to honor the supreme sacrifice made by these individuals by caring for their families. Heroes' work begins within 24 hours of the tragic loss and continues indefinitely. We invite you to learn more about Heroes' mission at heroes.org. We hope that you will consider supporting Heroes as they endeavor to honor those who protect us. That's heroes.org. Heroes, here for you, here for good. And now, back to the FarrCast and your host, Michael Farr. We appreciate you listening into the FarrCast this week. And now to introduce this week's special guest, here's your host, Michael Farr.
Welcome back to the FarrCast. I am Michael Farr. Thanks so much. Again, this is great. We have picked up thousands and thousands, and I'm going to tell you something. We've been advertising on Facebook, so we've thousands and thousands of listeners over the past few weeks. If you've seen us there or other places, we appreciate it. Welcome to all of our new listeners, and we appreciate your notes, your texts, your emails. hjennings@farrmiller.com, hjennings@farrmiller.com, or hjennings@hightowerinvestors.com. That we get them and we answer them. So let Harry know what you're thinking, and then he harasses me so that I will get back to everybody, which I enjoy doing, actually. So we appreciate you being there for us, and we hope we're covering things that help you as we cover Wall Street, Washington, and the world. Joining me now, my great friend Stephanie Link, who is the chief investment strategist for Hightower Advisors, a CNBC contributor. Stephanie is the voice, and face, I think, not only of Hightower, but now of CNBC. If you want to figure out what's going on in the world, just listen to Link. Welcome, Stephanie.
Hi, Michael. How are you?
I'm great. I'm doing just great. Stephanie, we've got a market that's nearing its all-time highs. Jim Iuorio in the first segment, a real technician and trader, of course, says if he sees this market settle in at S&P 4450 or above it, he thinks it's good to go, and you can trust that number. He's been looking at earlier levels of the past few weeks of resistance through which the market has traded to the upside. When you go through resistance, of course, for a technician, those resistance lines become support lines. He kind of sounded okay, but he also said prices are high and your longer term returns are determined by what you pay, and you're paying a high price. So he didn't see huge upside here, even though he thought the market would hold up. What do you think?
Well, it's wonderful to be back, by the way. I love being with you, and congratulations on all of your new followers. That's wonderful news for you. I know you work really hard at this podcast. It's one of the best out there on the street. So it's a privilege to be on. I would say we have to just step back a bit and look at what the economy has done, and it's actually held in remarkably well. In January of this year, we know, you and I talked about how negative everyone was for the full year.
Yes.
January was supposed to be the high watermark in terms of growth and GDP. So growth came in at about 2%. It was supposed to roll over, and we should have been in a recession by now. That was consensus. I know you and I were not in that camp.
I was in that camp. I was definitely in that camp. I was just wrong.
Cautious, but you were a little bit more cautious, but not as negative as so many out there. And I know you and I talked about it, and in fact, what has happened throughout this year is we've seen an acceleration every single quarter in GDP. So we grew 2% in the first quarter, 2.1 in the second quarter, but then we just put up 4.9% in the third quarter. And I look at it's a little wonky, but I know you look at it too. It's the Atlanta Fed GDP Now tracker. Basically, all it is all the data goes into a computer, and it spits out a number of real-time GDP. And that number is now at 2.1% for the fourth quarter, up from 1.2% last week. So we are decelerating as we thought, because third quarter was kind of and really not sustainable, but we're not crashing hard. And I do think that a lot has to do with the job market. And I know non-farm payrolls last week came in soft, but we just got an initial claims number that actually was better than expected. And you have a 4-week moving average of jobless claims at 210,000. That's 210,000. During a recession, that number gets as high as 375,000. And why I look at the 4-week moving average, like you don't want to look at weekly stuff. It's too short term. But my point being is the job market still remains pretty robust. And then last week, we had 2 data points that I thought were really key. Was the third quarter unit labor costs came down to the lowest level seen in late 2022 rather, and productivity numbers also came in at a 3-year high. What does that tell us? That tells us that inflation is actually coming down, and that's very good. Those data points are very good for inflation. So you have a little bit better growth in the economy. You have lower inflation. I think that means that rates have peaked, and seasonally between now and the end of the year, this is the strongest period. So I think that, along with solid earnings, I think we rally into the end of the year, Michael. I really do. And I think it's going to it's going to continue to be the leaders that have led us, the Magnificent Seven. That being said, I do think there's value elsewhere. And so, as you and I talk about all the time, we'd like to have a diversified portfolio, but I feel pretty good into the end of the year. 2024 is going to be more of a challenge because we know we're going to slow down even more, but we'll cross that bridge when we get to it.
But for those always lingering boogeymen of exogenous events, But for an exogenous event, I think, the path of least resistance certainly seems to be higher here. And Stephanie, one of the things that we've seen, all year here is the U.S. economy is healthy. The U.S. economy has been expanding. The rate of expansion here, as you've said, is slowing coming into the end of the year. And we do have real interest rates that are positive, meaning that, ladies and gentlemen, that the rate at the Fed at 5.25% is above the rate of inflation at, call it 3% or 3.25%, wherever that rate of inflation might be. So that gives you 2%. That difference is the real rate. It's about 2%. It could be 2.5%. Somewhere in there, there's a real cost of money, which means we are applying the brakes on the economy. But Stephanie, the consumer doesn't think the economy is doing well. What's the disconnect between what we're seeing in data? Folks, it's not Farr's opinion or Link's opinion that the economy is expanding. That's a fact, Jack. It is expanding, okay? Period. And I think it's an equal fact that people still feel yucky about the economy and are complaining about it, and they ridicule Bidenomics. And maybe that's a political thing, and I shouldn't say it, but the economics during this particular period are okay. Why do people feel bad, and what does that mean for stocks?
Well, as you know, negativity sells. And so I know you and I are on TV often, and I often say, turn it off. I want them to watch us, Michael. I really do.
Yeah, I know. I get torn too. Turn off the TV. Mute it.
Right?
Mute it.
Because everyone wants to be negative. I think at the end of the day, it comes down to jobs. Consumers have jobs. They have jobs and they're getting paid more than they have been on average, maybe 4.5%, 5%. If you switch a job, you can get 8% growth. So the numbers are the numbers. And we are a nation of spenders. And I'll tell you, in the last year, just gasoline prices coming down 40 cents year over year. That's 54 billion in potential additional consumption that the consumer has. And so I think it sets up nicely for a good holiday season. And I just think overall, we're a nation of spenders. Anytime I've tried to bet against the consumer, it's been the wrong thing to do. Whether we take on debt, we pay cash, we take it out of savings, whatever it is, we are a nation of spenders. And I think I keep a very close eye on it. I know you do too, because it's 70% of our economy, and it's important.
No citizen of the world, and I don't take this really as a great point of pride, but no citizen in the world more reliably will spend whatever you put in their pockets than an American.
Yeah.
Our consumers spend. Our consumers consume. They consume and spend when they don't have money. They'll go on credit. We've seen the credit card balances. There are reasons for concern. But as Stephanie says, for the years and decades now that I've been on CNBC and other TV outlets, that negative people always seem to sound smarter. I don't know why. They seem to have greater credibility. The negative nabobs, nattering negative nabobs. They just sound smarter, which is a bit frustrating. And yet, when you look and listen to Stephanie and you listen to Jim Lebenthal, you want to talk about a guy who had it right and has just gotten killed every day he tried to hold on to his opinion and defend his positive view, and he ended up right. And I don't feel like he's still gotten credit for it, but I bet his clients are giving him credit for it, Steph. What do you think?
I hope so, because he has been absolutely focused on the data. And that's the thing, right? That's what you and I do. We look at the data, we look at real-time data, and it's a lot of data. And nothing is perfect. It never is. There's always things to worry about. But I worry when I don't worry, because that means that we're complacent. So there's always stuff out there. At the end of the day, a better economy equals better earnings. When earnings are revised higher, which they have been, stocks follow earnings, profits, on the way up and on the way down. And so right now we're seeing the revisions higher, and I think that's also a good setup for the near term.
Larry Kudlow has said for years that earnings are the mother's milk of stock performance. And I've always extrapolated to economic performance over time too. If corporate America's doing well, America's doing well. Stephanie Link is the chief investment strategist for Hightower Advisors, CNBC contributor, and my great buddy. Stephanie, thank you for being with us on the FarrCast.
Thanks so much for having me, Michael.
That's it, ladies and gentlemen, for another FarrCast as we cover Wall Street, Washington, and the world. We hope that these insights and experts' opinions help you navigate the world of investing and the landscape with which we try to understand the economy and the world at large. Keep sending us the notes. We thank you so much for listening to the FarrCast. Please share us on your social media. I'll be back next week once again to cover Wall Street, Washington, and the world. Thank you so much for Harry Jennings, our producer, everybody at Hightower Advisors, and Farr Miller in Washington. I'm Michael Farr.
That's it for this episode of the FarrCast. Thanks for listening in, and a special thanks to all of our new listeners joining us for the first time here on Season 7. We hope you enjoy the show this week, and every week, as much as we enjoy making it for you. Thanks to our guests this week, Jim Iuorio, Dan Mahaffee, and special guest, Stephanie Link. As we are in earnings season, I want to take the time to reiterate that anytime we or any of our guests mention a specific company, please be aware that it is not a recommendation to buy or sell. Review with your financial professional before you make any investment decision. And as always, if we can be of assistance at Farr Miller in Washington, please reach out to us at hjennings@farrmiller.com. We are here to help, and I am happy to arrange for any of our listeners an appointment with one of our financial professionals to review your portfolio, your needs, and your goals. And depending on his schedule, I may even be able to have Michael review your portfolio personally. The FarrCast is produced by Michael Farr and Harry Jennings and comes to you weekly on all major podcast platforms, including Google, Spotify, TuneIn, and Apple Podcasts. You can stream past episodes as well as subscribe so you never miss out on a new one. We love reading all of your notes, and we try and respond to as many as we can. You can reach us at hjennings@farrmiller.com. Let us know any questions you have about past episodes or questions you'd like to answer in upcoming episodes. Take care, stay safe, and stay healthy. And we'll be back with you next week on the FarrCast. Wall Street, Washington, and the world. Farr Miller in Washington is a group comprised of investment professionals registered with Hightower Advisors, LLC, an SEC-registered investment advisor. Some investment professionals may also be registered with Hightower Securities, LLC, member FINRA and SIPC. Advisory services are offered through Hightower Advisors, LLC. Securities are offered through Hightower Securities, LLC. All information referenced herein is from sources believed to be reliable. Farr Miller in Washington and Hightower Advisors, LLC have not independently verified the accuracy or completeness of the information contained in this podcast. Farr Miller in Washington and Hightower Advisors, LLC and any of its affiliates make no representations or warranties, expressed or implied, as to the accuracy or completeness of the information or for statements or errors or omissions or results obtained from the use of this information. Farr Miller in Washington and Hightower Advisors, LLC and any of its affiliates assume no liability for any action made or taken in reliance on or relating in any way to the information. This podcast and the materials contained herein were created for informational purposes only. The opinions expressed are solely those of the authors and do not represent those of Hightower Advisors, LLC or any of its affiliates. Farr Miller in Washington and Hightower Advisors, LLC or any of its affiliates do not provide tax or legal advice. This material was not intended or written to be used or presented in any way to any entity as tax or legal advice. Clients are urged to consult their tax and or legal advisors for related questions.